To keep up with today's increasing production demands, growers are quickly realizing traditional fertilizers are coming up short. Beyond a single form of sulfur, MicroEssentials with Fusion technology delivers sulfate and elemental sulfur for season-long availability. Early in the growing season, sulfate sulfur provides young plants the nutrition needed for optimal growth. But plants dependent on sulfate sulfur alone are left vulnerable to the yield-robbing impact of leaching.
At the show itself here at Big Iron, but
MicroEssentials is very different. Over time, microbes in the soil more efficiently convert the elemental sulfur into sulfate, continuously supplying the crop throughout the entire season and beyond. Only MicroEssentials with Fusion technology delivers season-long sulfur for steady nutrition throughout the growing cycle, resulting in higher yields and higher profitability.
Kyle Nelson, Scott Hitter, and Brian Moore. Let's talk really about where we are in this land market. You kind of look back to those pre-COVID days and where we were since last year. Where are we sitting today? What's happened in this land market, Kyle?
Well, last year, coming into Big Iron, we kind of thought the market is up 15%. That was kind of the consensus. Normally, there's not a lot of activity over the summer, but that's kind of what we thought we were at. And I thought I was going to make a bold prediction that we would maybe see the highs that we saw in 2012, which for Cass County here would be maybe $7,000 an acre. And it turns out that was an understatement, as we've blown way past that and continue to still see tremendous strength and a lot of public sales activity.
Brian, what do you think's been a driver behind that?
Well, historically, commodity prices. You know, if you look at the charts going way back to the 60s and charted up through the 70s, when commodity prices were high, land prices followed right with them. And then we all remember the 80s, right? When everything crashed, land prices crashed as well. Well, then starting in the 90s, we started on this track with prices. Commodity prices, land prices just kind of followed hand in hand, and that continues today. So right now, I think the major driver, obviously, is crop prices.
We've got the inflation story. We keep hearing interest rates are going to keep moving upward. Does that buffer it any, or what do you see happening there, Brian?
Well, what's changed the most is the conversations in the coffee shops, because everybody's talking about interest rates. You know, for the last few years, we were talking about, they were predicting interest rates going up, right? But they never really did. But everybody was talking about it. Well, now they're going up. We're seeing them go up. But it does not seem to be affecting the buyers. They continue to buy, but it sure does affect the conversations in the coffee shops.
Scott, is this on all types of land?
It is. You know, obviously you get the one-offs if you've got multiple people interested. Location, you can't change that. And if the right people with the right funds are looking at the same piece of ground, it could be a high number. So on the rental side, though, what we're seeing is, you know, the rents have been steady to strong. Rents aren't following quite as fast as what we've been seeing the land values do, but we're seeing continued strength in the rental market also. There's some more talk from time to time on putting a flex option on a rent, things like that. But you know, when you start talking interest rates, there's a concern on our side on the rents. Input costs, that's part of it. So just something we need to be aware of going into 2023 and beyond.
What's the typical term on a land rent? Is it a year to year or?
Year. It really varies. So I manage land in northeast South Dakota, southeast North Dakota, all the way into western North Dakota. In, you know, any given region, there's historically what a tenant is comfortable with, what the farmers are comfortable with. We do have a lot of one-year leases. Having said that, part of our job as a farm manager is to reassure the tenant that, yeah, it's a long-term relationship, but we're just doing annual leases. We do have some 3-year leases out west, and we have some 2-year leases here. You get into the areas where there's sugar beets or something like that, you need to reassure the guy, whether it's a 3-year lease or a 4-year lease. So there's some options there.
The way these input costs have gone up, it could be a bit of a surprise, I think, when they come to that term renewal, I would think, huh?
It, yeah, it's, you know, obviously everybody's aware of it. The fertilizer costs, the petroleums, the insurances, interest rates, things like that. At the end of the day, guys are making money right now. And because of that, rents are gonna hold. Or, you know, depending on the market and where you're at currently, there may be a slight increase again.
I had the story on the air this morning. Fapri out of Missouri talked about this year is going to be a year of record net farm income. They also talked about those production costs are a whole lot higher than where they were before. Brian, you cover a pretty good footprint. What's the area that you cover, and do you see differences really from state to state?
Well, I cover the Dakotas, Minnesota, Iowa, parts of Nebraska, and parts of the Pacific Northwest. So I see quite a variety of crops. And it just seemed like throughout the Midwest states that I work in, it's always kind of the same theme, is that over the years, the top quality land sold good, continues to sell good. And there are pockets where mediocre land, lesser ground, didn't sell as well, but it seemed like the last year, it seemed like all types of land is selling good.
There seemed to be a time, Kyle, when there was a lot of those buyers from, say, Iowa or Nebraska would be coming to places like North Dakota to buy land. Is that still the case?
Yeah, and I think we're seeing an uptick in that in the last year. You know, we still usually say the market around here is driven by local influences, whether it's a farmer or, you know, a local investor. But certainly, yeah, we're seeing an uptick in the investor influence. You know, I think hedging against inflation is one of those. I mean, I just heard of a sale, tracked a sale this morning, and it was a record high for that area. And what I'm told, I mean, that the buyer, you know, would be in his upper 80s probably. And, you know, I'm not sure why they'd be buying land other than hedging inflation. Is cash sitting in the bank probably, he figures, is worth less and less. He'd rather own a piece of land, and he owns land in the area, so.
Scott, any other factors you see in the buyers are looking for when they're buying land?
For the farm side, obviously the primary thing is location, what fits into their operation. The investor side, they still do look at a return. I think the potential return they're actually hoping for, whether it was 5% or 4%, I think that's actually dropping down a little bit now. And it almost needs to. What I see, land values versus what you can get for rent. If we historically were, you know, years ago, maybe we were at a 4%, and we've been in 3s for quite some time, and it's continuing to diminish a little bit, your annual return. But, you know, the land appreciation factor is more than making up for that.
Is there any change in the number of investors that are in this land market, Brian?
Well, I think there are. I mean, it used to be it was hard to compete against the stock market, right? When we were talking to an investor, he usually had a number in mind, and he'd come to an auction and he'd bid early, but then he would drop out as the bids kept going because we already reached his number, because he could take his investor group and go into the stock market and make money, guaranteed. But, you know, look what's happened to the stock market the last year or so. And I think the investors now are coming back, and they're paying more attention, taking more notes, and they're, like Scott said, they're lowering their numbers. And they are starting to buy now, so a lot more than they have in the past.
Kyle, when you take a look at land sales, I always think of typically now, this is when land sales start picking up and we get through this fall season. Is that really the typical buying season, or did we see some activity? I was hearing land sales really all summer.
It's changed into a 12-month deal, and I think the internet and online sales, auctions are a big part of that. You know, we used to be concerned about, well, we don't want to have it during this period because that's whatever harvest, it's beet harvest, it's big iron or something, and that's just not a factor anymore because we certainly have people bidding from their tractor, you know, so the time of year is less of an issue. As with a lot of things, we change with the times, just like the online auctions, and certainly we've gone through periods where we don't have many auctions. We do other methods, but that's one of the changes that we're seeing right now.
What percent of ground do you think is sold with with an online sale? Brian?
Well, if you remember 3 years ago, we weren't even hardly talking about online sales.
COVID
Well, then COVID hit, right?
Yep.
So we were forced to do it. And I would say right now, in my territory, at least 75% is sold with either an online only or a simulcast, which is a combination of the two. It just seemed like it's really a good plan, a good idea to let those online buyers come in because not everybody can travel to your auction. So the online portion has really changed the way we sell land.
And we get into a confidentiality issue too. I mean, for as many auctions as we've had around here in the last 10 years, traditionally, it's not an auction area and still isn't in some little pockets. And you get the nuances of a local, I don't want to bid against that person or that person. And I've had guys tell me that if I'd had to show up to bid, I wouldn't have bid. But because it's online, so it opens it up. I think it creates more of a true result because you avoid some of those little games that could be played from that standpoint.
With it being such a fluid market, on the appraisal side of things, how do you get involved on the appraisals when we're in an environment that
It's
we're
a
in?
real challenge. I mean, I'd say most of the appraisal work I've done in the last year, really, I bet I spend 15 to 25% more time on each one just evaluating what's going on, because you don't have public sales in all areas, and certainly just because one sale in a certain area might show a 40% increase, how far do you extrapolate that information? And certainly historical knowledge that we have in certain areas helps with that, but it can be a real struggle if you lack, and there's certain areas that they're just historically aren't public sales, they're private or they're not really exposed. So that's the challenge is evaluating those neighborhoods and determining if time adjustments are appropriate or whatnot. And literally things have changed by the day. I mean, I had a sale last winter that the day it happened, it set the record for farmland in Cass County, and that lasted maybe 3 days, So it's, because all we can do, we can't, as an appraiser, we can't predict the future. We're not, that's not what we're doing. All we can do is take what we know, and make an opinion on what we know that now. So it's a challenge.
What is the purpose of an appraisal?
Well, I mean, people always, people ask me, "Oh, you're busy doing appraisals?" Yeah. Oh, a lot of people selling. Well, it's not just that. We do a ton of work for estate planning, gifting, estates. I do a lot of work for watershed districts and that sort of thing. So, and right now, of course, I'm getting a phone call every few days or sometimes every day. We want to sell. We kind of want a knowledge base to work from, just so we're not going blind into this thing. So those are the primary reasons.
I can open up Ag Week or Farm and Ranch. It seems like there's a lot of supply out there. Is that a fair assessment, or we got a lot of land on for sale?
No, and it's surprising. I mean, the papers are full of farm sales now, and I get that, you see it, but really overall, I mean, maybe 1-2% of all the available farmland in the country is traded in a year, so there's a lot more people hanging on to their land than ever before. But like I say, the papers are full of them, so.
I think part of it too, it's more regional, so you see it. If you're just looking at a glance, you see all this land for sale, but it's here, it's there, it's all over. So, there's definitely way more demand than supply right now.
When you take a look at the rental side of the arrangements, Scott, you talked a little bit about flex. Are there other types of rental agreements that are common, or is it pretty much still cash rent?
Sure. Again, that goes back to the different regions in some historical, what the local farmers are comfortable with to a degree. You get in, the bulk of North Dakota is a cash rent region. There's a few crop shares, no full custom farms that I'm doing right now in our region. South Dakota, you get farther south, more crop shares. Iowa, Illinois, you probably get into more custom farms also. So what we are seeing here on the cash rent side, whether or not we actually do a flex on a cash rent, and a flex is basically your cash rent is your floor. And then a flex portion is, it can be based on, pretty much anything you want to look at. And what we do sometimes is we look at yield and your local elevator pricing. We like to use a local elevator because then we have the basis factored in there. And we do the yield times the average price that we do. And then we'll use a factor similar as if it was a crop share, if it was corn at 22 to 25% or beans in that 30% range. If that total calculation for the flex part is more than your cash rent, then there would be a payment in the fall to the landowner. That's one of the more complicated ones. We have a simpler one where if the corn prices are over $5 or $5.50 on the board and beans are $12 or more, then there's an automatic $15 or $20 kicker. That doesn't take into account any local basis or anything like that. So, marketing is so critical on that. And depending on what you look at on your flex, you just want to be aware of those things. As a farm manager, right, wrong, indifferent, when you bring up the term flex and you're talking, it tends to put a floor under your cash rent. A lot of guys would rather pay a little bit more for the cash rent than have to worry about a flex. So,
I see too the younger generation is a little more easier to work with on that, to be honest with you, because they realize that's the future and they understand it a little better. I do find some of the older generation bucks that a little bit. They want to know what they're paying and that's it.
Yep.
But on the flip side of that, I mean, I like it because it floats with what's going on, because otherwise you're kind of guessing, and if the market changes a lot, then you're on, the wrong side of that, on either the landowner or the tenant.
So just to add to that, one of the things I would comment on, at the end of the day, what we're looking for is a partnership. Whether it's a farm manager or if it's a landowner directly working with the tenant, the farmer. At the end of the day, it's a partnership. It isn't, supposed to be, well, I'm trying to get this and you're trying to avoid that. What makes sense for both sides? Depending on your landowner, they read the same things we do. They see what the markets are doing. They maybe focus a little more on high commodity prices than the input costs, but they have availability to see that. I think it helps long-term to at least have those conversations, whether it's through a farm manager or with the owner directly, saying, hey, yeah, we do have good prices. We're willing to participate with you. And I think that helps the relationship actually between the owner and the farmer. Sometimes it's facilitated through a manager and sometimes it's not, but I think those are important conversations to have. I've got guys that'll say, well, I personally will write a bonus check if I have a good year. And there's nothing necessarily wrong with that. But at the end of the day, when that owner knows, okay, I'm in this game also, outside of just my cash rent, they're happier, they're satisfied. So it's at least should be part of the conversation on the negotiations on a rental.
In those negotiations, is there any language, I'm thinking first right of refusal, those kind of clauses, are there some things that we should be mindful of when we,
Yes.
either by renters or landlords?
Yes, as an owner, don't do it.
Yeah. I've had that conversation at least 3 times in the last month with people asking me about that. It seems like a harmless thing, and it seems like a fair thing. The problem is, as a landowner, you're getting handcuffed. Basically, what you're doing is giving away a right of ownership. You're allowing the tenant to not have to act. All they have to do then is react. So if something happens, you're a motivated seller. If you got a first right of refusal in place, your tenant doesn't have to act. It's gonna be a deterrent to anyone else making a legitimate offer because they don't want to be used to set the price for somebody else. Nobody wants to waste their time with that. I've had people flat out tell me that. So it's something that seems to have come up more lately, and it's just, now if you want to give them the first chance to buy, like I will give you the first chance to make an offer, that's a completely different story. But a first right of refusal basically, and just to explain what that is basically, your tenant would have the right to match any offer that is made. And there's slight variations of that, but that in essence is what you're talking about. And like you said, it seems harmless, but it really handcuffs you as a landowner. And there's other ways to address it.
Same argument for like a automatic renewal, or?
Yeah, you certainly wouldn't want to do that. I've seen that in a lease lately too. It should be mutual to both sides. So an automatic renewal, I mean, things have become very volatile and change quickly. And that's why we use shorter term leases, because obviously we're working for the landowner, but things have changed so quick. It's good to be able to adjust. I think when we do single year leases, when I first deal with operators, they're a little nervous at first, but then after a few years, it's like no big deal. They know we're not looking, we're just trying to keep it fair and stay at that fair level.
How do you address things like fall tillage or those kind of things? Scott?
What was the question?
Fall tillage, how do you address that?
In the lease.
Sure. So part of that, it's twofold in my mind. It's first, if we're fairly new under management on a farm, the tenant's got some concerns. Okay, here's this farm manager. Is he going to kick me off? What the world's going to happen here? I'm not putting any more money into this ground than I have to. We're not doing our job for our client if we've got that tenant believing that. We want him to be able to continue farming as he normally would. We want him to take care of that ground as he takes care of his own ground. That's tillage, that's fertilizer, that's all sorts of things. And who knows what's coming up. Maybe it's some carbon things too. But, part of what I would say, whether there's a farm manager or not, conversations fairly early. What are we looking at for next year? This is when we want to do our tillage. We want to do our strip tilling. We want to put fertilizers down. Are we going to have the ground for next year? Back to the relationship part. I can't overstate how important it is to have a partnership, so to speak. So fall tillage, the way our leases are written, you do want to have understanding. So back to the conversation. Just have a conversation, and yeah, you're going to be farming it, and that pretty much goes without saying. There's nothing easier for a farm manager than having a good tenant stay in place.
Yeah. Brian, we talked about this land market and then where we've come just in the last year. It's hard to have a crystal ball, but are we setting a new standard? Are we in a bubble? What's your view on what kind of market we're in?
Well, it used to be easy to answer that question, because if you look at it historically, whenever it went up to record highs, it eventually peaked out and then it came back down. And I think a lot of us are kind of wondering when it's going to end, because right now it just seems to be every week we hear about a new record high. And so if I had a crystal ball, I wish I did, because I'd either be buying or selling right now, but I don't. And there's so many factors out there that are kind of, hanging over us that could change in a minute's notice, and it could affect the price. Normally, the good news for land prices is, we see crop prices, commodity prices rise sharply, but then they can also decline sharply. But what we usually see in the land prices is they'll rise, but when commodity prices drop, they just flatten out or maybe sink a little bit. They don't seem to follow like commodity prices can. So that's the good news about land values. But what's it going to be in the future? I mean, right now we're at historic highs, so, it can't go on forever. So when it's going to end, I don't know.
We usually come to these discussions every year and talk about interest rates have to go up because they were basically at zero. And eventually now they finally are starting to move in that direction. Every year it seems comes up that conversation of the 1980s. That's when I came into this business, and it was a pretty tough time. That interest rate environment was a whole different situation than we are today. It's really not, it's apples and oranges, I'd have to say, when you look at what we're in today, wouldn't you say?
Well, I was farming in the 80s too, so that kind of tells you my age, but we all remember the 80s, and we don't want to ever see that happen again. And the good news over the last few years is we always said that interest rates were low, so it's different than the 80s, right? We weren't going to see things crash like they did in the 80s, because interest rates just kept going up and just affecting everything. But so the last few years we kept saying interest rates are still good, but now we're seeing interest rates rise. Where, like I say, the coffee shops are full of the conversation. Everybody's paying attention to what it's going to be tomorrow, and I think we'll have an effect on it.
All things local, Kyle, bringing in the conversation right here in the immediate area, the FM diversion. What's that done to land values, the land market in this immediate region?
Well, certainly, you know, a lot of people are getting bought out. Farmsteads are getting bought out, and people's land is getting bought out, or they're having easements put on there. So those people have got a bunch of money that they can do a 1033 with, and they have 3 years to do that. So we're kind of on the front end of that, and I think we're seeing an influence, especially south of Fargo. People want to replace land in the same kind of general area. And the one thing we're seeing is rural residential sites, something, you know, Grover trees with little or no buildings on it. That market was strengthening to begin with, and I think we're seeing it take off even more. Because there again, those people getting bought out of their farmsteads, they're getting probably more than market value because, you know, they're being displaced. There's different rules for that scenario. So that's kind of an interesting phenomenon. It used to be that on the North Dakota side, we saw those kinds of scenarios selling for stronger than the Minnesota side. Minnesota's catching up. We also used to see a bit of a threshold. You know, it didn't matter if it was 5 acres, 10 acres, whatever. 100,000 is kind of a bit of a threshold for somebody to buy a site, to plop down, build a house, whatever. Now we're seeing way beyond that. I mean, there's an anomaly, but west of town here and south of Mapleton, that was $500,000 for about 13, 14 acres. So that kind of sets the high end, but it's kind of an interesting phenomenon.
When you look at, like you said, there's a lot of demand for that acreage. We want to move out of the big town and move into a little piece of farm ground ourselves, maybe a few acres to dig in the dirt. Does it matter what kind of outbuildings we have? What do you see for demand and those kind of things? Brian?
Well, outbuildings don't necessarily, they don't necessarily trend. It's hard to say what, you know. Most people that live in the country, they want a shed of some sort. So, you know, I would say more and more that's more appealing, yeah, for that to be there. Ag buildings per se, I mean, your hobby farmer generally doesn't need 2 10,000 square foot sheds, for example. So, and from a lending standpoint, their borrower probably doesn't want to lend money against that either. Do you see anything, Brian? Have you been to sales where there's been buildings?
Well, it kind of depends on what the use of the, you know, if it's a city guy moving out in the country and it's got a big pole barn on it, I think the banker might question him, you know, is that the right property for him? But it, you know, just to piggyback on what Kai was saying about that type of market right now, it's so location specific and for example, you know, if you know, we all wish we owned a quarter section of land that's on the city limits of Fargo, Sioux Falls, you know, Grand Forks. I mean, you can name your price, and like Kyle said, if you got land close to town and it's got some trees, you know, now you can about name your price. But that's really, you know, we always call it like the 10-mile circle. You know, if you're within 10 miles of Fargo, Sioux Falls, the bigger towns, highly, you know, desirable. But for example, you take that same piece of wooded ground and you know, put it in central South Dakota or central Minnesota, you know, it just seems like it sells for pennies on the dollar for what you can get around the big cities. So it's just so location dependent right now.
The wind blows here, so that established windbreak probably's got...
Exactly. Everybody wants a tree. Like say, if you got trees, you can about name your price.
I notice when I drive through Illinois, I don't see the extensive L shelter belts around farmsteads that we do here. It just struck me the last time I drove through there.
The wind doesn't blow there as much as it does.
I evidently not.
CRP, what kind of factor is that when we're in land sales?
That's a good question. I struggle with that because, you know, we're pretty much down to buffer strips for CRP and land. So we struggle with that when we're appraising stuff because, you know, 20 years ago there was a ton of land in CRP. You know, you had land coming out the farm and you had, you know, entire parcels. So what we look at CRP in terms of appraising it, a lot of times it's the rate of return, but you know, it's just, there's a lack of data, you know, to get a grasp on what that is. So I would say the motivation, we just sold the quarter west of Buxton here a few weeks ago, and obviously the motivation was to farm it. So they're gonna clear it. There was overgrowth, and they'll farm it, probably drain tile it. So there again, certainly now we're gonna see that more. That's the intent, is to clear it and farm it. But then if it's not feasible to that, then you're in a different segment altogether. Because generally the farmer buyer, they're paying for income producing acres. So, you know, if you've got absolute lousy ground that shouldn't be farmed and it's in CRP, you're kind of in a different segment altogether.
Yeah.
Looking at that. So that's always a challenge, looking at something, trying to predict, because we can't always know, I mean, how many rocks are under there? You know, I may or may not know that, you know. So it can be tough to figure out which way you're going with that.
What about recreational ground? Hunting still
Same-
seems to be driving
same
that, I
thing.
would think.
I guess here, I'll let Brian chip in too, but here, when I'm appraising something, I always say, okay, what is it? Is it hunting land, or is it recreational land, or is it farmland? If it's farmland, then those 20 acres of woods in the far corner or along, probably don't contribute a lot of value. Here, you get into east of here in the woods, it's a different story there. So, but on pure recreational tracks, I've been saying for years, I've seen a pretty steady market on it because there's not a lot of income associated with it, but we've seen a few sales in the last year that just threw the roof on. Usually it's wooded land. Deer hunting is what seems to bring the money. Waterfowl, I haven't really seen it around here, but Brian can chip in with what he's seen.
Yeah, I mean, what I've seen, I started my real estate career selling just recreational properties, so I had, you know, gained a lot of knowledge of it, but it really depends on the area. For example, in South Dakota, the premier recreational property is pheasant hunting. If you've got pheasant hunting land, you got buyers from Texas to Florida, they're calling you, they're interested in that pheasant ground because, you know, you buy land, pheasant land in South Dakota, you're guaranteed the right to hunt on it. But deer hunting is different. I mean, I had people that have this beautiful deer hunting land, you know, mule deer country, but the buyer's not guaranteed a tag. You know, or if their friends come up, they're not always guaranteed a tag unless it's archery. You know, archery you can get a tag, but rifle hunters, it's really limited. So that's why pheasant hunting ground is so popular. First of all, everybody seems to love it in the South Dakota. And the fact you can get a tag every year, you can hunt on your land. And then you get into Minnesota and the recreational property is more along what Kyle was talking about, it's the woods. And then it's, you know, deer hunting and those types of things, or if you got water on it, you can, you know, fish it and that. So it kind of depends on the region.
Do you see more use of cover crops?
Yeah, I think it's coming on some. You know, it's some of it is farmer driven, some of it is owner driven, and you know, depending on where the markets will go, I think we will be continuing to see a few more cover crops. Obviously, in the northern region, our window kind of dictates that to a degree. I did see a program. There's a seed company, Stein Seed, actually has a partnership with a farm management company other than us, so I won't name who it is, but Stein is willing to offer up to $30 an acre for the cover crop seed if that farmer, the tenant, uses Stein Seed for 3 years. So there's some incentives out there. I think we're going to see more of that. I'm excited to see, you know, the Prevent Plant Acres obviously is the best candidate for a cover crop.
Yeah.
And then what it does the following year. And, you know, at the end of the day, it's about the farm being able to make money. And if the cover crops prove themselves, I think we'll see more. If they don't, we probably won't.
I think, if I'm not mistaken, today, Vilsack's announcing some major climate smart agriculture projects. We know some of the privates are certainly paying some bonuses for carbon payments, those kind of things. Do you see that becoming a bigger part of the story?
There's a lot remain to be seen on that. I mean, a year ago that was a big talker. I haven't had it brought up to me as much as last year. The problem gets to be, how do you measure it and how do you determine what a fair amount to pay is for it? And to date, the numbers I hear thrown around is what the payment might be to that farmer. It's not real enticing. And then the other issue is if you're already doing those practices, you don't qualify. So it's, that's kind of a fairness issue there too. So, I guess it's one of those we'll have to wait and see questions.
In one of the unknowns, obviously I haven't read this new bill, but where the payment's going to come from, is it going to be traditional payments to the farm or an ad hoc payment? Where's the incentive there? There's going to need to be something there along with just what it's doing for the productivity of the ground.
And then you get the question of who gets the payment.
Yep.
Is it the farmer or the?
Right.
Yeah.
Yep.
Kind of along that same lines, crop insurance, does that have an impact on land values, or can it?
Has crop insurance had value? Well, I think it's set a floor. I think we've seen that. I think we saw that after things adjusted after 2012. I sense that a lot of buyers kind of stood by the wayside when corn went from $7 to $3 a bushel, for example. Everyone talks about the 80s, and everyone was thinking, is that going to happen? I think we found out that amongst other things, crop insurance helped keep a floor under that. And I was just talking to a guy out, my neighbor I ran into, and he, some years like this, based on your crop insurance, you're going into it, you can't lose money. So but there's trade-offs with that too. You're shifting risk away, so that means cash rents are stronger, land values are stronger. So there's always a trade-off with things, but that certainly kept the floor.
I think with the wet spring we had, we've already had a lot of demand for tiling, but Ellington and everybody else seems like they've been busy ever since. Their tile plowers have been going nonstop. What kind of factor does tiling have on that land value?
Well, I think it's almost expected now. If you got a wet area, you're just kind of expected to tile it. You go all the way down to Iowa, and when you're promoting a piece of property, it's, if it's tiled, that's like the first line in your ad, is that it's tiled. And if it's not tiled, then you have to answer a lot of questions. So I think tiling is definitely keeping the values higher, because if it's tiled, then people are really looking at that, and they'll take that property over another one that isn't tiled. And like in Nebraska, you're not talking about tiling, you're talking about irrigating. Same thing. If you got dry land acres that are in a zone where it's dry, you just irrigate it. And if you don't, then people are wondering why you're not irrigating it. So, but if it's irrigated, then you get top dollar.
So if they aren't in that place, a landowner, should they be considering tiling or irrigation, if that's the possibility?
Well, we all went through those wet years where I've seen a lot of tiling that happened, as of the result of those 2 wet years we had 3 and 4 years ago. It seemed like there was tile being put in fields that maybe didn't, had been dry for 20, 30 years, and all of a sudden we had those 2 wet years, and then all of a sudden everything was getting tiled. And so I just think that, there's a time and a place for tile, but it just seems to be, if there's even a question about if that land is wet, it gets tiled.
The thing here, and tile is still a fairly new thing here, with a completely flat Red River Valley, you end up pattern tiling it, and then oftentimes with a pump. We're talking about significant expense. As opposed to more areas of more topography, like some of the areas Brian's talking about, you don't need to pattern tile it. It's selective tiling, and obviously you're talking about a lot less expense. So here, from a landowner standpoint, it's tough to pencil it out, in terms of recouping that cost simply with rent. But certainly I see it in other areas, and I can think of west central Minnesota, for example. You see the difference. It more than pays for itself, because it's not costing you $1,000 an acre to tile something. It's half that or less. And if you're at, I can think of Olivia, Minnesota, where land's selling for $12,000, $14,000 an acre now. The gap between that and stuff that needs tile is well more than the cost of tile. So it just kind of depends on where you're at. Locally here, it doesn't necessarily pencil out, maybe, for a landowner. Certainly does for a farmer, long term. But I've always been an advocate of tile. I've seen that from day one when I did appraisal work around Redwood Falls, and I could see the benefit of that. Get more bushels out of the acres you farm as opposed to farming more acres.
Would take note, if folks have any individual questions, give us a wave, and Randy's out here with a microphone, you'd be happy, and Kara as well. I didn't see her behind the sign there. I know you guys aren't individually in the part of, say, Crystal stock shares, but that's something Farmers National Company's involved in yet. Are we starting to see some stock sales at this point?
Yep, none of us are directly handle that, but I mean, last year we finished up, I think the market was 4,300, 4,500 a share for Crystal. And I think we're starting out this year at that level. I would assume that would continue to escalate, but that's remains to be seen. Historically, the highest sales come in the spring. You get a few shares selling to fill out a field or whatnot. So that's where that is. And I think MNDAC is pretty tightly held. We're not directly involved with that. Again, I just talked to a neighbor of mine who grows MNDAC shares, and it sounds like they're back their payment level a few years ago. I mean, the payment level was at such where, I mean, it wasn't, you were hoping to break even, but I think they've recovered for that, so that's good. It's good. And I saw that in the Southern River Valley. I mean, values, especially values, rent's not so much, but values weren't where I thought they should have been, correlating historically with other parts of the region. And I've always attributed it somewhat with that, I mean, the MNDAC situation. So.
Has that kind of migrated north on the Crystal side as far as where those
The acres are?
Acres are?
Yeah, I mean, definitely we've seen a push, as corn has become more of a factor here, I think it seems like more of the Crystal acres go north. And that's, that trend can only continue so far, but there again too, I've seen some people that quit growing them and rented them out in the last several years, they're starting to grow them again. So, it's continually evolving.
What about for, say, ethanol co-ops? I know you guys...
I did talk to our guys, and they told me the ethanol activity is stronger than it's been in 5 years, and I think you just attribute that to profit margins in the ethanol industry, dividends that they're paying out, so that's where they're seeing the biggest strength and activity in that market.
Brian, you cover yourself a pretty wide swath, but educate me on Farmers National. You've got really a larger footprint than those 5-6 states you're talking about.
Yeah, well, they've been around since '29, and I think we have about 5,000 farms under management right now. The main lines, really the heart of the company is farm management, but real estate, appraisal, large areas. We talked about FNC stock. We have Hunter's Lease Network, and so we're kind of a well-rounded company that has really expanded from our roots of farm management.
Oil and gas management, timber management, neither of which I could tell you much of anything about. And then also, one thing with renewables, solar's becoming, that's the calls I get, and our oil and gas management handles that as far as analyzing those situations and the leases and whatnot. So I'm happy to defer those questions to that department. So
Certainly there's got to be more and more generations removed from the farm, so you've got maybe siblings that are multiples that are part of that. How does that complicate the situation in farm management, or what kind of factor is that?
All depends on the individuals. You could have trouble with a single person as much as you can have trouble with multiple.
If it's the right one, right?
Or it can go pretty smooth. So just the way we're structured, our support team in Omaha, that's where our headquarters are, they handle a lot of the fine details amongst the individuals. A lot of times, for whatever reason, they'll tend to be a spokesperson in any family ownership. We deal primarily with that person while we handle all of the people as partners.
The title of the presentation about evolving times. factors, Brian, that landowners should be alert to in these evolving times?
Well, there's certainly a lot of them, a lot of factors. I mean, right now, world events are a major factor that we're all paying attention to, and it's just hard to turn on the TV without hearing about something going on that could affect us. And I think we're lucky that we live where we do, because we've heard about the West Coast, the East Coast, that type of thing, and we're kind of in an area that I think we feel safer, and I think that we're more connected to the land, we have more connection to the farms, and it's our heritage. But you get east and west, and that's not the case, and that's where they seem to get off, on problems. But I think we're pretty well grounded here. We're lucky that we live here, and I have no plans of moving.
Very good point. Any other questions from our audience? Just give us a wave. Where are you guys located here at the show?
Livestock building, 2 buildings down?
Yep.
That way. So
I think a lot of questions are sometimes better one-on-one when we're talking some of these kind of things. So you'll be around for a bit, or like you said, just check them out in your building, or they can find you online, those kind of things too, I'm sure.
We're right across from the popcorn. Everybody seems to look for the popcorn, so you'll see us.
Right here.
You'll have to push the button. There's a button on that microphone.
that's got
What do you find for key traits to make a flexible rent work? For the landowner and the renter. I would say the very first thing is communication. And a true, if you're talking direct the owner with the farmer, or the owner through a farm manager with the farmer, 2 things: communication and truly understanding what's going on out there. It's you have to have a true expectation of what is and isn't available, and what is that ground return. Each piece of ground, it's similar. We look for the same thing at the end of the day. The farmer needs a chance to make a profit, and the landowner wants a fair return. And each piece of ground is going to be unique in doing that. At the end of the day, depending on who your farmer is, he may not have a tolerance for a flex. He may say, well, gee, Scott, I got this flex in here, but you have no cap on how much potential profit rent your owner's going to have. If he gets 200 bushel corn and we're at $6, that's a pretty good gross number, but it doesn't address the expense side of things. So it's the responsibility of the owner or the manager to understand, what is the profitability out there. What we tend to focus on the crop side, though. What we haven't talked about is the government payment side. Should there be a flex on that? You want to get a heated discussion sometimes, that will tend to do that. And you don't even know sometimes what the payments are until we're into it. So that's a difficult thing to handle.
I've been working with a flex with one of my parcels of land for a number of years, and I find that trust and honesty and understanding are really important on both parties' parts. And even to the point, if we get a replant, then the guy needs to share in that cost of that replant for the percentage that you're in. And I do cap it at double the rent, but I'm cheaper up on the front than I am with a straight cash rent.
Yep. And you as an owner, you got to have a feeling that you're participating in that too, though.
Yeah. I have a few flex rents too, and some of them, the base rent is low, and you compensate that on the other end. And in others, the base rent's quite high, and you make adjustments on the flex side accordingly in that case too. So it's just kind of what works with the parties involved, the ground, all those things factor in.
I think they're pretty important topics. Selling their farm is probably a once-in-a-lifetime kind of situation for most of us. So you want to have somebody with some experience when you're sitting down and around that table and having those discussions, I'm guessing. Well, Again, we appreciate the chance to, you guys have been a part of these discussions each year for many years, and we appreciate the partnership with Farmers National.
Thank you.
We appreciate you allowing us.
Again, Kyle Nelson, Scott Hitter, and Brian Moore from Farmers National Company. Look them up here at the Big Iron Farm Show or after the show itself. You can find them online too. And keep in mind, you can go back and watch these videos on yourliveevent.com or on the Red River Farm Network YouTube channel. We can connect you there too. We've got a session coming up in just a couple of moments. We're going to be hearing from Marissa Nielsen, talking about a whole slate of things from succession planning, estate planning, trying to fire that partner that you don't like very much, that being the IRS. We're going to have that topic come up here in just a few minutes, so stay with us. Again, on behalf of the Red River Farm Network, thanks so much for joining us here at the Big Iron Farm Show.
Thank you, guys.
Thank you.
1, 2, check.